The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Welcome, folks. Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, we get the Dow Industrials up 9, Nasdaq's flat, S&P's are up 5 points. We have the gold contract up $6.90, trading at $1,284 an ounce. Silver's up 4 pennies at $19.83 an ounce. Copper, platinum rather, is up $8 at $14.16. You get copper down 2 pennies at $3.15. Light sweet crude is flat at $105.88. Bonds are up 21.6 at 131.19, and the dollar is up 107 ticks, trading out at 83.27. Our phone number is 877-927-6648. Let's go right over to this SPY first. We'll take a look at the SPY. So what you had on Friday, folks, is this. The SPY was the actually only indice that actually failed. So this morning, what do you have is this. We are up 47 cents right now. You get 15 million shares. The high of Friday was 167.93. We got to 168.12 thus far. You're coming in, so check this out. So on Friday, what we did is this. You did 104 million shares. The day before, 135. You're coming into this 244 million number up here. So what we're going to need in order to get up and over that inside the SPY is a dramatic lift. Just don't see it. Dow Industrials. We take a look at the Dow Industrials. What you have with the Dow is this. Same type of setup. The Dow got to a price point today of 15,490. And inside the Dow out here, this is what you have, putting juice into it and taking juice out of it. Boeing right now is the leader out there. That was up, it's up $2 after being down 5 on Friday. If we do take a look at Boeing, Boeing is going to get smacked around big time here, folks. It's going to be interesting to see how this checks out. And this is why. So if we look at Boeing and you put it back like on a good weekly, the extension has been dramatic. There's no doubt about it. When I say dramatic, you know, we're talking about going up for quite a bit without the juice. The last time it had some real juice up there was 86 bucks, and you're at $1.04. You come off the high, you know, you come off. Well, let's put it this way. This is where it gets wild. You actually have a high that has volume, and then you come off the high with volume. So it's still going to have to attack first the 96 level. But it looks to me like there's going to be a few little problems with Boeing out there. Hewlett Packard, that's pushing the Dow slightly higher. You got Bank of America and Home Depot. Taken out of it is Verizon. That's down 64. You got Cisco down 24. Walmart is down 66. Let's go over and take a look at Walmart. So we have what Walmart is this. She's still in a consolidation. She's at 76.90. And the bottom of that consolidation is out there at about the 73 level. Nasdaq Composite. We have when the composite is this. Excuse me, folks. Composite continues higher. It's basically flat right now. That launched the May 22nd high. That's 35.22. If we take a look at the NDX 100, what you have with the NDX 100 is this. She's at 75.35, and in order to get to lower price, she's going to have to get back inside 74.95. This morning, what you have, so on last Thursday, you have 47 million shares. She's going into 59, but she takes it out, bottom line. Friday, 31 million. We'll see what this shakes out today. Gold contract. What we have with gold is this. What gold has done, folks, is this. You had the low structure that was out there on the 28th of June. It got tested July 5th. Couple signs of strength. Now you're going to see it build some cause. What's really intriguing here about the gold contract, it looks to me like we're going to actually not only have a liftoff, but it almost, the way this is trading right now, it looks to me like we're going to be walking in one of these days and actually get a gap higher that's going to leave that whole island just sitting out there down at the bottom. Bond market, we have with bonds is this. Bonds came down, they tested the lower price range, got back inside the range. Now, with the way this is setting up right now, this is going to be for a Monday in the summer, folks. I expect we're going to see some real action here today, and this is why. What the bonds have done is this. We came down hard, and that's when, was July 5th. There's fast price destruction with the contraction of volume, because it got underneath the lows that were established on the 24th. Then what ended up happening? You tested once. You tested on the July 10th, rejected lower price, build a couple cars for a couple days, and what we have happening out here this morning is this, is that you had the spike down. Now check this out, because this is really cool how this works. The spike down this morning, we intraday, let's see. Yeah, so at 8:30 this morning, we spiked down with 1,800 contracts. But guess what, folks? The 1,800 contracts is going into 2,500. That's when you, I love seeing that, particularly on tests. Why? Because if you only looked at what happened this morning, you'd be like, okay, hold it. No, you're spiking with volume. But you weren't spiking with volume because you were going into something that was much larger. It rejected the low. Now what you're doing is that you're moving higher, and you're not only inside the range, but if this bond just has a little more price spread today, so watch this. We're at 134.19. If this bond can get to about 135 or 135.04, what you're going to have is that you're going to have wide price spread. You're going to, well, we're going to need more volume. We're at 104,000 contracts right now. But if you got both, what that would do is that it would break the downtrend that actually started on May 1st. The downtrend's not broken yet. All that's happened each and every time one of these bounces, that's all it's been thus far. So it's going to be interesting watching that bond market out here today. And the way that the market is setting up, I suspect we're going to get a little volatility. We go over to that dollar index. What we have with the dollar index is this. Dollar index right now, she's at 83.24. She's going to have to be building some cars. She did 100% move or move. When we go back to the 24th of June, 19th of June rather, she was at 80.61. She comes all the way up to the 84, 85 price point, backs down. Now, as she backs down, she had an expansion of volume as she backed down, but it was still lighter than the way we went up. But when you get an expansion of volume like that, she's going to have to build some cars in order to get up and into higher price. Citigroup, let's take a look at Citigroup. Citigroup this morning came out with some numbers. So this is their earnings per share. The estimate was $1.18. They came in with $1.25. And if we take a look at Citigroup right now, you know, she's up 69 cents, but it's not going to do much for her. What happened with Citigroup is this. Citigroup, $53. May comes down pretty hard to 45. Has high volume at 45. We put this on a monthly basis, and it's actually pretty amazing that you think that Citigroup is a $570 stock, and it's a $51 stock right now. Numbers are deception, especially in the stock market, folks, okay? Whether it's, you know, the 10-for-1 split, it's pretty amazing. But bottom line is that, let's put this closer. So if we put it on a 3-year weekly, what you have with Citigroup right now is this, is that the 5150 is crucial for Citigroup, and this is what it is. 5150, folks, is the high that was generated in 2011, January 2011. Now, on a monthly basis, on a weekly basis, rather, you had 300 million. First time we took that out, you took that out in May with 121 million. So watch the correlation. The correlation is 121 million versus the 300 million. Can't handle it. What does it do? It pulls right back. Now what's happening is that we're coming up to the exact same level with even lighter volume. You got to remember something. Each and every time that you test, whether it's testing highs or testing lows, it's giving you more information, number one. And if that information is coming in Citigroup's case, what's happening is this. It's getting weaker and weaker and weaker as it keeps testing the same spot. That's telling you flat out you get monster distribution that's happening in that marketplace. We go take a look at Bank of America. Let's see when Bank of America is actually, let's see. So Bank of America is going to be coming out with their numbers on Wednesday morning at 0700. Bank of America right now is testing its high. The high on Bank of America out here is on the 31st of May. That is $13.99, and we've hit $13.94 thus far. And if you're a bull, you don't want to be testing that out here today, folks. So She hasn't hit it yet. She's only hit the 1394. If we take a look at Bank of America, we pull this back a little bit, and what you're going to see on Bank of America. Okay, so BAC. It's not that bad, actually. Well, she's at the 1387. She can go test somewhere around the 1010 area. Let's go over to Caterpillar. We take a look at Caterpillar. What Caterpillar's done is this, folks. I like the way Caterpillar's trading. Now, I wouldn't be buying it just yet, but Caterpillar is setting up. We're at 87.65 right now, and what you have with Caterpillar is this. She's been in the same consolidation since going back to 2010. It's a decent consolidation, and just about, so at 87.65, she pulls back into this 79 area with lighter volume. That's going to be a nice setup. The reason being is this. When she came off the bottom in April, she goes like this. She goes from 79 with two separate sides of strength and gets all the way up to 90. She backed down. The first time she backed down was on the 24th of June. 7 million versus 18. And what's happening right now is that as she's getting to the high of the consolidation, she's losing her juice right now. So when you see that, two different things will end up happening. Not enough buyers up there. You let the baby pull back. And what's really cool about this one is this, is that you very well, this would be like the third time it's down there. So you have the identification of the volume that you want to be looking at. And what you do is this. The benchmark, no doubt, is the high volume, 22nd of April. The first time it tested it on 7 million. The second time it tested on 4 million. What you want to see for a high probability trade goes like this. You pull back down there and you get less than 4 million, it's a field day. Because you get 4 million, was testing the 7 million, but was actually getting into the 22nd. And the 22nd, of course, is the big number, meaning, and in order to test less than 4, that is totally where it's at. Let's go overseas and we take a look at what's happening in Europe right now. What we did have last night, you had Asia up slightly. Right now we get the FTSE up 0.5%. The DAX is up. The DAX is actually flat. That's kind of interesting. So let's go take a look at the FTSE first. You get what happens with the FTSE and the DAX. Both of them are having a hard time getting any traction out here this morning. And that's after 4 or 5 days, just like we've had, with not wide price spread, not accelerated volume. And you always got to be leery, folks, when the market can't move. It does move higher, but you have very small price spread in it. The DAX right now, we are up $10 right now. And she's at 82.22, and she's just coming right into that monster downdraft that was out there. The second downdraft, which was on the 19th. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. The Dow up 12 right now. NASDAQ is flat. S&Ps are up $5. We're going to be right back.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow right now up 8. NASDAQ is flat. You get the S&P's up 4. And if we go take a look at some of the larger cap stocks out here, this is what you have. You have Boeing's up 237. That's after getting basically, hammered on Friday, down $5 with that fire. Coca-Cola is up 19 cents. You have DuPont up 13. Disney is down 63. You got Big Blue up 71. Honeywell is down 13. Let's go over to Big Blue. Big Blue is a problem, folks. It's going to be interesting watching this whole thing shake out on Big Blue. And the reason, of course, is that it had everything going for it on the way up, meaning had price spread, took out the swings, did it with volume, did all of the above. And what it's been doing right now is building cause for this 185. Now, 185 is the number that it wants to trade to. It's not like it's going to fall apart. But in the context of where the Dow is and Big Blue can't get going, that is a heads up big time. And what you have is this, is that what's holding Big Blue up is August of 2011, and that number is 183.65, because that's where it had some good juice. But each and every time that it builds cause to get down to that lower level, we'll see whether the volume expands. It has not expanded yet. Really unusual, though, that when the Dow is higher, that Big Blue couldn't be up at that highs. Because you're going to remember something. The Dow, and this is where it gets dangerous for the Dow, is a price-weighted index. Okay, so when you're talking about Big Blue out there at a couple $100, it makes a difference. Google. Let's go over to Google. We talk about price. My God. So Google right now, folks, is at $900. 917 to be exact. The high out there in Google is 919.98, and you know, she's still actually pushing into those highs, and she actually has some juice. On Friday, Thursday and Friday, we did 2.6 million. 2.6 million was trading into 3 million. That's not bad. If we take a look at Google and we put this on a weekly basis, what you do have is this: is that yeah, she's building some cars up here. There's no doubt about it, man. This is going to be pretty wild. Google looks like it may be taking over the world pretty soon. Apple's still in that consolidation. She still wants to test out this bottom. And what's going on today with Apple, she's got a little problem out here. She's up $4, but this is what you have. You're doing 2.8 million shares, and she's coming into 26. So this is not the day you want to see actually Apple up. So each and every time that Apple comes down to that 388 area, that's where she turns into some problems. Let's go over to Asia. We take a look at Asia. So last night in Asia, this is what you had. We had the Hang Seng was flat. The Nikkei was up 0.2%, and Shanghai was up 1%. If we start with the Nikkei, we take a look at the Nikkei. This is what you have. Okay, so she was up $33. This is after coming off that high. She's going to have to build some cars. So let me bring this back a bit. Put it on a 5-year. So talk about parabolic. This is a trip how this went. There's no doubt. So the Nikkei, folks, when this baby took off, it took off from a price point of 8,600 straight up to 15,900. So you're talking almost 100% move. First leg down gets you to 12,000. The buy on the Nikkei, folks, is about 11,500. And this still, the way this is actually set up, which is just amazing, this still has big juice in it. Hang Seng. We take a look at the Hang Seng in Hong Kong. This is what we have with the Hang Seng. She is at 21,300. And the Hang Seng, let's see. Okay, so the way the Hang Seng is set up, put this on a monthly actually. Okay, so we're 21,300, and she is gonna, she's gonna go test her lows. So the Hang Seng wants to go test the 16,176, which was out there from October of 2011. What the Hang Seng did do last month, and this is where they get the confirmation. So the Hang Seng expanded price and volume. We went from 22,500 to 19,200. That's a nice leg down. The volume expanded to 43 million, and that was an expansion off 34 million. So it's a 25% expansion as you got into lower price. So the way that's set up is that that's not done on the way down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We have the Dow right now up 6. NASDAQ is flat. S&Ps are up 4. You got gold up $5. You got silver up 3 cents. Bonds are up 22 ticks, and King Dollar is up 202. We're going to be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We get the Dow right now at 4. NASDAQ is down 1.5. You get the S&Ps up 4. Inside the commodity markets, this is what we have out here. You have, let's see, natural gas is down 1 7/10. You get wheat off 1 4. Copper is down 8/10. Crude oil, man, that thing is just up there. It's down 0.25%, but big deal. We're at 105.62. You get coffee. Coffee's up 2.3. We go over to that gold market. We take a look at the gold contract. What I expect you're going to see here with gold, folks, is this: is that Friday was a really sweet day. Let me tell you, they couldn't whack it down. Had small price spread, didn't back off, and the way this is setting up right here, I suspect we're going to go sideways for a few more days. But all this has to do is jump the creek. It's set up at a creek right now, and that creek is set up at 1,300, and you're at 1282. But $18 for gold is nothing, folks. And if this does jump it, it's going to be wild, because you have two different things happening. You'll have an island bottom that's set up there pretty nice, and when you do come down, see what I've seen, and this is really wild how this works. When we came down on the 20th, we went from a price point of $13.51, excuse me, down to $12.75 in a heartbeat, $75. Well, when you actually make bottoms, what does happen is this, is that it can go right back up the other side just as quick. Because, see, that level down there on the 20th wasn't the highest with volume. The highest with volume is going all the way back till the April 15th time frame. So you had a false break, which, you know, you can get downtown, uptown, the whole ball of wax. Had lighter volume, got lower, tested the lower part of it. Now the real key is going to be, how does it get back into that level? And, you know, we'll see how it gets back into it. So I like the setup, though. I really like the setup. What I particularly like is that I like the aspect that it was the end of the market, meaning that no matter where you went a few weeks ago, folks, okay, that was it with gold, meaning that everyone hated it. And that's what it takes to get a solid bottom in. After, you know, you're talking about if we bring this contract up, this is pretty intense. There's no two ways about it. You know, when you're talking about something that pulled back for years, okay, gold did it. You know, gold made its high, folks, in September of 2011. Think about it. You know, it teased everyone for another year. But guess what? It was in that downtrend the whole time. And then the downtrend really accelerated last February. That's how that's set up. When you actually take a look at it, you know, you're going to see where it did, what it did. It came right back to that December 09. That was the last time that it really had juice on the upward side. You know, so that was screaming out there. So that's kind of the way this thing is set up right now. What I think we will see... and this is where it always gets crazy. Each and every time, in fact, you know, watch this. I want to show you something with Newmont. This is pretty sick about the management inside these companies is like insane. So Newmont, of course, one of the largest gold companies in the world. What Newmont end up doing, folks, is that Newmont basically cover their hedge at about $1,570 gold. And that cost them $5.5 billion. Then it cost them another $5.5 billion last year, just about 4 months ago, actually, for one of their mines. So it's amazing that a company can actually make or lose $10 billion in the course of 4 years and still have some money. But, you know, that's what happens in the gold market quite a bit. That's what it seems to happen quite a bit. What we do have with some of the juniors is that these juniors that get to stay alive, folks, okay, are going to be intriguing. The reason being is that who is going to be the first company, number one, that has money, that comes in to a junior? Because right now you can get juniors for nothing. I mean nothing, okay? I actually went through a couple hundred stocks. Well, what is really sweet, I don't have to go through them one by one. I can actually put a formula in, and it tells me how much cash they have left, how long they can stay in business, and this is a bunch of juniors up in Canada, and it's pretty intense because about 60% of them basically will run out of cash in about another 45 days. When I did this about 3 months ago. So there's going to be deals out here, and we'll see how that shakes out. Because if you remember, in 2004. The bull market had started in 2001, 2002, but still by 2004 there were plenty of people that are in the mining business, meaning the executives, that really didn't believe they were in a bull market. You know, because I used to interview these guys all the time. It was a mind blower because they had been in a bear market for so long, they just didn't believe they were in a bull market. And what had happened, a few of them hesitated to do deals that they could get gold in the ground for really inexpensive prices. You know, when the gold contract finally went up to about 450, 475, 525, 575, 525 to 575. That's when those executives realized that, okay, hold it, we do have something different going on this time. Because you got to remember something, even in that 20-year, 2-year span, there were some very decent counter-trend bounces inside that market that basically put some juice underneath them. What is going to be, if we go over to Rheingold Resources, GOLD, what you have with Rheingold is this. She's setting up. She's setting up nice. Okay, what you have is this. She's back $1.44 today. You know, she's at 64.81. Somewhere around the 61 67. That's going to be a nice little setup. She's had two signs of strength off the bottom. She came back in. Let me just pull this up for a second. So, yeah, she's done everything she's supposed to do. So watch what happened is that Rango came off that high of 127, got cut in half. First time comes down with 7 million shares, but you know what? That 7 million shares is going into one of the breakout areas that she had 11 million shares going all the way back to 2009. So it's pretty cool. And listen, folks, if you want to test drive the gold report, this is the time to do it. Get over to our website at TFNN. You can test drive that a full month absolutely free. Some of the high volume stocks today in a low volume market. Let's see what we got. You have, Leap Wireless. Oh, what a score that is. That's pretty wild. Look at that. Leap Wireless. That's a 50% move. I know someone's taking it over, man, but that's a move. Holy cow. So, Leap Wireless, that's really unusual. No, it's a 100% move. AT&T Leap deal puts pressure on smaller rivals to pair up. Marvell, a $1.2 billion deal to buy Leap Wireless adds pressure to smaller competitors such as Sprint and Dish to bulk up through mergers or acquisitions. AT&T, the second biggest U.S. wireless carrier, announced plans on July 12th to buy Leap for $15 a share in cash, offering a premium of 88% over the target's closing price. Pretty amazing. Let's pull this up and see if this baby had a high volume high. What did it have out here? That, folks, is really unusual when you're talking about 80%. Oh, man, look at this. Okay, so I guess, well, this gets interesting, too. So check this out. Oh, man, this is intense. It might have been it's an 88% premium, but guess what? Leap Wireless, folks, was a $99 stock in 2007. Wow. And then goes down to $4.90. And all it's done... This is amazing, actually. You know what this has done? So you check this out. If you understand the art of time in the trade, all it's done, amazing, is that it comes right back to the last time that it had volume on the way down. And the top of that, folks, is $19.28. That's what it did. You first okay, so it gets down. You get to a price point. The bottom there was $12.82. The top was $19. Comes back down there, tested with 97 million versus 120 million. And that's it. That's the number. That's pretty amazing. No two ways about it. We go take a look at the good old Walmart. So Walmart, the retail sales come out this morning, folks. Okay, there she is. So Walmart, flat market out here, 48 cents on the way down. And let's see what they're saying retail sales-wise. Retail sales in the U.S. increased less than forecast as demand cooled at building material outlets and restaurants, showing the biggest part of the U.S. economy lacked momentum in the second quarter. 0.4% followed a 0.5 increase in May. The figure showed consumer spending, which accounts for about 70% of the economy, may take time to accelerate. You know what's going to be interesting about this one is that let's see. I wonder how. Okay, so when you actually look at this, it's 0.4 versus 0.5. But if you actually look at the credit numbers that have come across from the Federal Reserve Bank, folks, the credit numbers have gone up big time. So we'll see where, in fact, that money is being spent. It's definitely getting lent. Credit card consumer debt has gone up pretty dramatically, so they're spending it somewhere. We'll find out where exactly they're spending it. Let's go over to the energy sector, the XLE. We take a look at the XLE. So we have what the XLE is this. She's at 81.81, coming right into the downdraft, coming right into ICE, actually. So the 81.90 is ICE in the XLE. We hit the 81.96 out here today. You're doing that with last Thursday. So last Thursday we had 14 million shares. Friday, 8. You're going to love it. She's going into 19 million shares. ExxonMobil. We go take a look at ExxonMobil. We take a look at ExxonMobil. So with ExxonMobil, she is at 93.29. She has a volume of 1.7 million. She's going to need a lot more volume than 1.79. There's no two ways about that. We take a look at the small caps out here. What you had with the Russell 2000 out here this morning, Russell 2000, she's trading at 103.19, and she's dying on the vine too. But bottom line, she keeps pushing up that slightly higher price. And that thing is, she's at 7 million shares. She took out that high from the 22nd that had 68 million. Last Thursday, she did 30. She did 34 on Thursday, and she did 28 on Friday. We go take a look at the J.P. Morgan Chase. J.P. Morgan came out with numbers last week. Right now, she's trading flat. She's at 32. Oh, that's going to be interesting. She couldn't. First off, J.P. Morgan couldn't make the high. The high that we're talking about out here is 55.90. She gets to a price point of 55.87. That's amazing, actually. And now what you see with J.P. Morgan. So check. Now this is really unusual for a Monday with chart volume. J.P. Morgan is actually coming down with an expansion of volume today. So someone is selling J.P. Morgan this morning. We had 9.3 million shares. That 9.3 million. If we just go back last week, she was doing 16 million. We're talking about 9.3 million. What time is it? It's like 10:30 in the morning, right? 10:30, 10:40. So someone is into selling J.P. Morgan. Maybe they have another whale that they're going to be in a little bit of trouble. We'll find out. I'm speculating. I don't even think that, folks. But the bottom line is that someone is thinking something about J.P. Morgan, because when you see volume coming out of an equity, when you have a day that has light volume, okay, that is a heads up in a big way. And let me just see if I can find. Okay, so we'll see if we can find. Okay, so this is what you have with J.P. Morgan. If you happen to be watching Tiger TV, what you're looking at is that you're looking at all the bulk trades that are up there. And yeah, someone's coming into the stock. You know, you're at a $54 stock, and at the open, what you had 500,000 shares, but right after the open, someone's laying into this thing. You know, between 8,000, 9,000, and 10,000 shares at a time, they continue to throw it in, and as we're speaking, they're throwing it in, and it's always wild. So at 1023, 10,000, 1028, 10,000, 1009, 10,000. Most of the time, what you have is that probably is the same fund. You know, I love looking at some of these, because what you do have is this: people just like using different numbers, and that's just the way it goes, folks. Some people like trading 10,000 at a time. Some people like trading 7. Sometimes people like trading 8. It just depends what you like trading as you're going in and out, and that's the identification mark. That's the little elephant that is inside the room when people are either coming into equities or getting out of equities. That's just the way that it shakes and bakes. Let's go over to the Rand in South Africa. We take a look at the Rand. Rand right now is still trading at 9.9, and that's going to be this Rand, folks. I mean, I can't wait for Harmony to come out with their numbers. So Harmony's coming out with their numbers August 14th for that quarter. But when you look at that Rand, this Rand, folks, the whole quarter has been at very weak levels, which means that the South African gold company should be printing money. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We have the Dow. The Dow is up 5. Nasdaq's flat. S&Ps are up 4. We're going to be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there. Whether it be our health, career, or our finances, some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So you get the Dow up 8 right now. NASDAQ is flat. S&Ps are up 5. Don't forget, folks, at TFNN, we start live programming each and every trading day, 9 to 6 Eastern Standard Time. You can get all that programming right on your cell phone at TFNN.mobi. So the live programming goes from 9 o'clock in the morning, 6 o'clock at night, and then we replay. We stream 24 hours a day. If you do want to get Tiger TV, folks, all you do is go to TFNN.com, and on the right-hand side, you're going to see a little box that has all the little gadgets in it. You hit that box, our service will pick up what kind of device you are on, and, of course, it will deliver it right to you. And, of course, coming up next, we got a big lineup for you. We got Basil coming up 11 to 12, Larry 12 to 1, Darryl 1 to 2, David White 2 to 3, and then I'll be back here from 4 to 6. Right now, we take a look at these markets. If we go into some of the large caps, this is what we have happening inside the large caps. You have ExxonMobil flat. Coca-Cola's up 9. We have DuPont up 15. Oxy is up 18. Big Blue's up $1.26. You get GE down 10. Merck is up 15. You get JP Morgan Chase off 25. And as we said a little bit earlier with JP Morgan Chase, that's really unusual, I can tell you. JPM, let me just go over here and look at this again. Because what you do is that it's like, who knows? And this is particularly after they already come out with their numbers, folks. You know, they come out with the numbers, decent numbers, but someone doesn't like what is inside that. That's the way that seems to be set up at this particular point. We take a look at the NDX 100, what is moving the NDX 100 out here today. It's down four points, which is no big deal. And this is where it does get interesting, though, because when the NDX 100 got over its highs last week, it was Rangel Resources that took it over it, folks. Rangel, bottom line, has a decent weighting inside the NDX 100. And what's going on here today, you get Alexa Pharmaceutical bringing it back a little. Look at these biotechs, man, love to be volatile. Look at that thing. Oh, my God. So check this out. So Alexa Pharmaceutical, folks, on Friday went from a price point of 100 to 125. Oh, my God. And then it opens today. So it closed Friday at 114. It opens today at 115. It's trading at 109. And if you put this back, amazing. Yeah. So Alexa Pharmaceutical got over its high, 119, closed underneath it. Now let's say it can't bust it up. Going to go bust it down. We go take a look at Oracle from one of our Tigresses out here. You get Oracle right now trading at $52. And that's after, so I like this one. So check this out, folks. Oracle did a couple different things. You have two gap downs thus far. First gap down was in March. Stock gaps from 36 down to 32. Comes all the way back to 35. Gaps down again to 29. Comes back to 31. And check it out. On Friday, monster volume on the way down, 157 million. And now you're going up with 9 million. So what Oracle's doing, she's building cause to get into the lower end of the range she's trading in right now again. And that lower end is $29. And what's holding it up, so this is pretty cool. So check this out. What's holding Oracle up, now that can actually be the bottom of that range too, and this is why, folks. When you take a look at Oracle, December of 2011, that's the high of the downdraft, which is $29.49. And it hit $29.98. That's amazing, actually. Put this back a year. Yeah, she's gonna hold up. She's gonna hold up down there. $29 to $27. You stay right there, folks. The man, Mr. Basil Chapman's coming up next with you, and then of course we got Larry, Darryl, David, and I'll be back here. Have a great one. Have a safe one. Coming right back, folks.